Hey there. Welcome back to another episode of the Young Investor Podcast, where we break down the financial world in a way that's easy to understand. I'm your host, Ollie, and today we're diving into a significant geopolitical event that's been making headlines worldwide: the recent coup in Syria, which has effectively ended the long and devastating Syrian civil war. You might be wondering, how does a coup in Syria affect my investments? Well, geopolitical events like this can have ripple effects across global markets, impacting everything from stock prices to commodity values. Let's unpack how this major development could influence your investment portfolio. First off, a coup introduces a lot of geopolitical uncertainty. Markets generally dislike uncertainty, which can lead to increased volatility. Investors might react by shifting their assets to safer investments like gold or government bonds, causing fluctuations in stock markets and currency values. If you have international investments, especially in emerging markets, it's crucial to reassess your risk tolerance and ensure your portfolio is well diversified to weather potential storms. Syria is located in a geopolitically sensitive region. The end of the civil war might bring some stability, but the transition period following a coup can still affect neighboring countries like Lebanon, Turkey, and Jordan. These countries could experience economic spillovers such as disrupted trade routes or an influx of refugees, which can impact regional trade, tourism, and investment flows. If your investments are tied to the Middle East, keep a close eye on these neighboring economies for any signs of instability or growth. Syria has significant oil and gas reserves, making it a key player in the energy sector. Political changes can disrupt energy production and exports, potentially affecting global oil prices. If you're invested in energy companies, especially those with exposure to Middle Eastern oil, you might see some volatility. Additionally, infrastructure projects in Syria could face delays or cancellations under the new regime, impacting construction and engineering sectors globally. Political instability often leads to a decline in investor confidence. Uncertainty about the new government's policies and potential sanctions can result in capital flight, where investors withdraw their investments to safer markets. This can devalue local assets and reduce liquidity, making it harder for businesses to raise capital and for investors to exit positions without significant losses. Ensuring your investments are spread across different regions and sectors can help mitigate these risks. For those holding assets directly in Syria, such as real estate or business interests, the coup poses immediate risks. There could be nationalization of industries, expropriation of assets, or destruction of infrastructure, leading to substantial financial losses. Foreign investors might also face challenges in repatriating profits or withdrawing capital, depending on the new regime's stance on foreign investment. If you have any exposure to Syrian markets, now might be a good time to consult with a financial advisor to reassess your positions. Syria is part of various global supply chains, particularly in sectors like textiles, manufacturing, and agriculture. Political instability can disrupt these supply chains, leading to delays, increased costs, and shortages of goods. Companies relying on Syrian imports or exports may experience operational challenges, affecting their profitability and, consequently, their stock performance. Diversifying your investments to include companies with robust and flexible supply chains can help reduce this risk. A coup can lead to significant fluctuations in the Syrian pound, making it difficult for businesses and investors to predict costs and revenues accurately. Currency instability can also affect international transactions, increasing the cost of doing business in the region. Investors holding assets denominated in Syrian currency may see their investments lose value rapidly, necessitating swift portfolio adjustments to mitigate losses. Political instability typically raises the cost of insuring investments in affected regions. Higher premiums for political risk insurance and other protective measures can increase operational costs for businesses and reduce overall investment returns. Investors might need to factor in these additional costs when evaluating the viability of investments in Syria or the surrounding region. A new regime may implement significant changes to Syria's legal and regulatory framework. These changes can affect business operations, taxation, labor laws, and property rights. Investors must stay informed about these developments to ensure compliance and understand how new regulations might impact their investments. Legal uncertainties can deter investment and complicate long-term financial planning. Finally, investors are increasingly considering the ethical implications of their investment decisions. A coup may prompt concerns about human rights, governance, and the humanitarian impact, leading some investors to divest from Syrian assets or those connected to the new regime. Ethical investing principles can drive capital away from unstable regions, influencing market dynamics and investment opportunities. So, there you have it. From increased geopolitical risks and market volatility to sector-specific impacts and changes in investor sentiment, the repercussions can be very diverse. As young investors, it's crucial to prioritize diversification, stay informed about regional developments, and consult with financial advisors to adjust your investment strategies accordingly. Before we wrap up, don't forget to subscribe to the Young Investor newsletter. It's your go-to resource for exclusive tips, insights, and strategies on personal finances and investments. Stay ahead of the curve and make informed decisions to build your financial independence. Thanks for tuning in to this episode of the Young Investor Podcast. Stay curious, stay strategic, and as always, happy investing. Until next time, take care.